Hello and good evening, everyone. I'm Abhijit, and welcome to a new episode of Investing Fool. Hope you all are doing okay. The year is drawing to an end. We have 2 days remaining. So, today's video will be a bit special. We'll take a look at the year that has gone by, and we'll take a look at some of the stocks that have moved the portfolio quite a bit, both on the positive and the negative side in the past year. And anyway, like the next rebalancing is due on Jan 1st, which is Wednesday, a couple of days away. So aage ka aage dekhenge, but let's take a rear view mirror today and look back on some of these stocks, some of these stories that happened throughout the year, and what we can learn from them. We have a lot to learn both from the losing stocks and the winning stocks. So we'll take a look at some of these charts, and yeah, let's just get started. The familiar disclaimer that whatever stocks I'm describing, just realize where I'm coming from, right? Like currently many of these stocks are not in our portfolio as well. Some of them are in the portfolio as well. You can go and check out what stocks are in our portfolio, when we bought it, when we sold it, whatever. All those details you can find in the video description. The link for the portfolios are there, so you can find it anyway. But my point of saying this is that do not take this as a selling or a buying or any kind of recommendation or advice. We don't even do forecasting. We don't know where the stocks are going in the future, right? We just look at the past, what has happened, and we will take some sort of general learnings from what we'll see. Okay, so let's get started. So we'll discuss four winners, like the four biggest winners and the four biggest losers of 2024 for our portfolio. And one general thing I want to point out before we discuss the stocks individually is that we are taking both realized and unrealized losses and gains into account, right? So many of these stocks might be still in our portfolio. Many of them have exited the portfolio. So it's both ways, both for losses and for gains. We are taking the consolidated list of stocks which are still in the account and which have exited the still in the portfolio and which have exited the portfolio previously. So the first winner, which many of you would have guessed, it's our largest winner to date, is Cochin Shipyard, with a gain of around 146%. And you can see we bought this stock around the mid of March and we sold it around the mid of August. So this has been the trajectory of Cochin Shipyard over the past 1 year. And when we got into this stock, it's not that the stock was lying silent for a lot of time before that, right? So the stock was showing momentum for quite some time before that. Somehow there was a little bit of phase of consolidation here in the beginning of 2024, and we picked it up here, and then it went up quite a bit, then it came down quite a bit, right? And we have to draw certain learnings from these stocks. So the first learning is that, and we'll go through it quickly. I'll try to make this video as short as possible, but I tend to overreach, so please play in fast forward mode if you want. So the first thing is that momentum comes in large chunks. These chunks may be like 1 year long, typically around close to 1 year long, right? It's not very short, like not like 2-3 months, stuff like that. But typically it grows gradually, and then you do not have to catch the entirety of it. You cannot like enter at the start point of when the momentum starts showing and then exit at the end point of when the momentum just starts decaying, right? So you have to catch chunks of it. If you start at the very start and end at the very end, well and good, it's great for you. But typically you are good enough even if you catch a small chunk of it. So as I was saying, that Cochin Shipyard was displaying momentum. It had shown a lot of price appreciation even before we got in, right? So when we got in, Cochin Shipyard was already like a multi-bagger over the past some time, right? Then we got in, and then even then from there till this high, it was around a 230% gain that it showed, right? So and then the momentum collapsed. It started the momentum started decaying, and we got out here. We got an exit signal here, and we got out here. One thing that I always say, you may be knowing as part of this channel, that you will never get out at the top. Never try to get out at the top. It's not even a good thing, because you can always get an you can get an exit signal only after something stops showing momentum, right? Or the momentum starts decaying. So somewhere you get whatever your exit signal is, somewhere you get the exit signal and you quit after that. Do not ignore those exit signals. If like for example, if I'm too optimistic on Cochin Shipyard, right, and at this point I said okay, it has fallen by quite a bit, but I think or I feel that it is going to come back up. Look where I would have been, right? It just continued going on, like down, 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 down. It has had some consolidation in the past few months, but basically you would have lost a ton of those gains as well. So whenever your system says exit, then do exit. Do not dilly-dally around it. And yeah, so I didn't catch the we didn't catch the entirety of the momentum that Cochin Shipyard showed. We only like caught a very brief part of it at the end, right? The stock might again show momentum in the future. It might begin a new run, but in the past this run we only caught a small part of it. The total part was almost like 600% or more. But yeah, so you just need to catch small parts of these huge chunks that momentum rallies give, and get in and out as per your entry and exit signals. Also, as I said, the stock was showing 230% gain at this point, and at this point we were very happy, right? The stock was in the portfolio, it was showing okay, 230% gain, amazing multi-bagger. When we got out actually at 146%. So imagine this drop from 230% to 146%, and it just kept falling, and whenever our exit signal got triggered on the rebalancing day, we left the stock. So you will, whatever maximum gain you have achieved on a stock, that is never going to be the end game, right? The stock will always fall a bit and you will lose some of those gains. That is part and parcel of being an investor in this style of investing. So just make your peace with it. Let's move on to the next stock. So the next stock is Trent. It is currently in the portfolio, 138%. We are sitting at around 138% gain. Has seen a fair bit of consolidation. This is the longest stock ever in PF. So we bought this in December of last year, and this has been the first stock that is to remain in the portfolio for more than 1 year. So in this December, it crossed 1 year. It became the first stock to remain for longer than 1 year in the portfolio. Good for us. We also want to minimize churn. We do not despise or hate buy and hold as long as the stocks are showing momentum. As long as the stock is showing momentum, we are okay to buy and hold it for 10 years also. Okay. So let's see how long Trent spends in the portfolio. In terms of other things around the portfolio, this was also another stock that entered the Nifty while it was in the portfolio. So somewhere you get a sense that the benchmark indices are also kind of following momentum in a way, because they are as per the market cap, right? And as the price appreciation keeps happening, right, the market cap of the stock keeps growing, and they go on to become part of bigger and bigger and bigger indices, right? Small cap, mid cap, Nifty, Junior, Nifty, whatever. So Trent entered Nifty while it was in the portfolio. Now this drawdown that you see here from mid October to around mid of November, this was almost a 25% drawdown. But somehow we survived in the stock. We do have a secondary exit criterion of 25% on the rebalancing day. So we didn't come across any rebalancing days when the stock had fallen by more than 25% from its all-time high. Okay, but the overall magnitude of the fall was close to 25%. So you will and see, after that the stock actually kind of formed a bottom around it, and it has started consolidating and recovering some of those lost territory. So do realize that these kind of falls will come, 15%, 20%, 25%. You may exit at some of those points, you may hold on, right? That is pure luck. Like whatever stocks we are entering, exiting, it's all a game of probability, right? We are not doing any fundamental analysis here, right? We are just seeing the momentum signal, we are getting in. We are just seeing the decay of the momentum signal, we are getting out, right? So it's as simple as that. But yeah, somehow we survived when Trent showed this like almost 25% fall, and it recovered. Stocks do not always recover, right? As I showed in the case of Cochin Shipyard. Just give me a second. Okay, somehow I got a call in the middle of recording this video. Anyway, so stocks do not always recover. It can just happen that Trent fell this much, and we would have gotten some out here, and trend would have just gone down and down and down. That can also happen, right? So yeah, and also about the green point here, we bought the stock like before this is the start of 2024, but we bought it before this as well. So that's just another disclaimer. Let's move on to the third one. Third one is Dixon. It is still in the portfolio. One learning from this stock is that whenever sectoral tailwinds are there, whenever the outlook for any sector is very positive in the medium to long term, it helps the stocks quite a bit, right? So you can see all of the stocks that are in the electronic manufacturing space. Look at Cainstech, and that is another stock, disclaimer, which is in the portfolio. You have PG Electroplast, you have Amber. All these stocks have run up quite a bit. I have some discretionary position in PG Electroplast as well, and it has given a really good run of late. Again, no recommendation, no suggestion. One good thing to learn is that apart from the sectoral tailwinds, is that whenever a consolidation happens with a bit of a positive bias, it should not depress you, it should in fact delight you. So you can see here almost 2.5 months Dixon wasn't doing anything, right? So we got in here, the stock rose, and from here on it like went down, then went up, then again went down, then again went up, then again went down, then again went up. Here, only here it actually decisively crossed it, and even then there was some decay here. So at many points during this journey, right, stocks would have a long journey in your portfolio if you follow the system, but at many points you would feel like your mind would be saying that the momentum is lost and like I should get out, this money is better deployed somewhere else, the stock is not doing anything for 2 3 whatever months, 6 months. We have seen stocks not doing anything for like 5 6 months also, right? But somehow the momentum score is suggesting that the stock should remain in the portfolio, it should remain there, right? And on some of those, so it can happen either way. It can go down also, and you can exit here also. But here in this case, you can see that the momentum kind of revived, and Dixon just kept going up, and it crossed 100%. And as I said in the first example for Cochin Shipyard, that whatever gain you have achieved till now, for example Dixon is at like 116 120%, whatever, I should not assume that I'm going to get out here. So this is not my final gain, and that's why there's an asterisk here, right? This can very well go down from 120% to like 70%, 60%, whatever. The final gain, the realized gain, might be much lower than what I'm currently at, and it can go higher also. We do not know, right? So currently these stocks are in the portfolio. Let's move to the last winner stock, which is Kalyan Jewelers. Again, this is in the portfolio. So 3 out of the 4 winners are existing stocks in the portfolio, because in terms of realized gains, the next best stock was the 5th one, which was like IRFC at 67%. So Kalyan Jewelers current unrealized gain is around 91%. And you can see we bought this stock here around the mid of March, and it has been in the portfolio since, got an amazing run till almost the end of September, and has been consolidating there. Like from the middle of September, it has been almost 3.5 months, and Kalyan is not going anywhere. You can say double top or whatever, right? Or like we don't take any exit or entry decisions based on what patterns we find in the chart, but you can see it like tried to cross this resistance again, and was brutally shut down. So it is just languishing in the same territory. Within the portfolio, it has crossed the 100% gain mark, which is the technical definition of a multibagger, 2 times. So it has crossed, like it has given, like gone to above 100% gain for 2 times, and both times it has come down again. So currently it's sitting at 91%. Let's see how the future goes for Kalyan Jewelers. One second thing is that the time in the portfolio has little bearing on the returns. It has some bearing, but not a lot, and each stock's movement is defined by its own kind of persona, right? Just like a person. So Kalyan Jewelers, like some stocks will give, like will just come in the portfolio, give a lot of run, and then just keep consolidating for some time. Some will come in the portfolio, they will keep consolidating. You will feel like, why am I sitting at 0% for so long? And then suddenly, out of nowhere, they will start running, right? So you never know. Just follow the system, and yeah, the rest the system can take care for you. Okay, now the winners part is done. Now let's jump to the losers, and we'll start with the biggest loser of 2024, which has been BASF. It's in the chemical space, and the loss that we encountered on this particular stock was minus 28%. And you see, this stock was going crazy. It was going, when I was like when I was entering this stock, I was a bit scared, because like as with many momentum stocks, you typically like you would have seen a lot of gain in the very recent past when you get into that stock, and sometimes it might feel like I might be getting at the very top, and it happens in a lot of cases. It happens here also. Something similar panned out. So we got in here, and look at the trajectory till here, right? The stock was going up, and we got in here, and immediately you started falling. Right, immediately the stock started falling. Somehow it regained its mojo, and it went back. It couldn't cross this, right? And again it had a like really sharp fall, singular day fall. It was really high, and ultimately we had to exit here. So the momentum kind of reversed, and the loss was more than 25%. Now why was the loss more than 25%, right? So first of all, even if there is a criterion called we will get out when the stock falls 25% from the all-time high, we don't do that on any random day, right? We do that, like we take that call only on a rebalancing day. So if a stock falls by like 30% between the rebalancing cycles also, but if it comes back to like 22% on a rebalancing day, 22% fall from the all-time high, then still if the primary exit criterion is not met, which is the rank of more than 50, then we will continue to hold that stock, right? So that is how we take this call. So the losses can sometimes be more than 25% as well. It's fairly common, even if you have kind of a stop loss. It's not really a stop loss. You're just gauging whether something has fallen 25% from the top only on the rebalancing days, not on other days. Okay. During these single day falls, so discretionary calls can seem very alluring. So you might feel that I've fallen a lot, and my like if you are a trader, I'm not a trader, but if someone is a trader, they might feel that, okay, I'm seeing huge reds over here, let me get out here. And you might well be proven right? You got out here, your loss would be less than the loss if you had applied the system. But then, like, there is no like discretion. The problem with discretion is that there is no predictability, right? How would you apply the same thing to a different scenario? You do not have a playbook for that. So I tend to avoid discretion at all costs. The third learning, which is very important, is that you have to fail fast, and you have to recognize that you have failed, right? Do not stick with things. Do not try to convert a loss to a win. A loss will never be a win. Like, it might be a win in like 10%, but what is the opportunity cost, right? So if you are waiting for recovery, so let's say you fell so much, right? And then you're saying, okay, no, I have fallen so much, like I've lost like 28% of my capital deployed in this stock, and like I would go only after I recover all this 28%, right? So you may recover or not recover, that's a different point. Okay, but what if the stock just keeps doing this? Like, whatever BASF has been doing since then, it is just languishing around the same point. So you just keep holding that stock. You're still in the loss, but that money that could have been deployed somewhere else in a winning stock, for example, that couldn't be there, right? So you are paying in terms of the opportunity cost, and in terms of the nominal loss also, you are just extending your loss. Nothing great is happening over there. Okay, let's move to the next loser. So again, GRSE, many of you might recall this stock. So we in momentum we say catching the top, right? Catching the top. No, not in momentum, like in markets in general. So this you can see is a clear case, a crystal clear case of catching the top. So the stock was going great. We bought exactly at the top, so we got in here as per our system, and immediately the momentum reversed, the stock started collapsing. We got out 1 month later at here with a 24% loss, and from there on the stock has actually corrected even more. So the stock, after we exited the stock, like after our portfolio exited the stock has slid a further 13% from there. Okay, and this brings us to the to another learning, that while we always think that mean reversion works, it may not work in the short to medium term. In the long term, like there are different periods on which to gauge mean reversion. So mean reversion ultimately would work some way or the other, not in all cases, but in most cases it would work some or the other way. But like it hasn't worked here, right? So you could be waiting here for how many, like 4.5 months, right? 4.5 months the stock really has done nothing, and it might happen that the stock may not do anything for 5 years also, right? So do not bank your decisions on mean reversion. Do not assume mean reversion. Okay, so it may work sometimes, it may not work. It's just not reliable. So you have to take your decision as per what has happened, not as per what you want to happen or what you hope to happen, right? So yeah, let's move on to the third one. So the third loser was a Motherson for us. This is a bit different in a way that so the first thing is that large caps can also rise and fall as much as mid and small. Of course, like the amount of volatility and change is more in micro caps and small caps, but sometimes like this can happen. Like large caps can also show really good momentum and then show really like bad momentum or momentum reversals as well. The second thing is false bounces and consolidation can elongate the decay of momentum signal, right? But we can't do anything about it. So what I mean by this is that, so let's say we got in here. So at this point, like whenever a stock has given a high in the just recent past, it has come down a bit and it has started going up, right? We instinctively feel very confident. Okay, it has just gotten a high, it has dipped down a little bit, so I am sure that I am not buying at the like recent top, right? And it has started showing green candles again, which means like just like the previous few months, it is likely we might cross the previous high and go higher and higher. Okay, it didn't happen this time. There was a huge red candle here, right? We bought the stock here, again it went up a bit, and then again here kind of a big crash. Okay, then again it recovered and again it slid down, then again it recovered and took out the previous high as well. At this time, at this yellow point, and look at this yellow point as well, it has again, there is a lot of volatility here, right? It is going down, and again 5 consecutive green candles, and you have again took out you have reached a new all-time high, right? So at this point you feel very confident, okay, that I entered here, the stock has consolidated for quite a bit of time, and then I have made a new high. So long consolidation, not very long, but reasonable consolidation has happened, and I've created a new high. So I feel super confident that the stock is going to go higher and higher. The reality isn't so good all the time, so the stock just crashed from here completely. It just went kept going down and down and down and down and down. We exited here because of this kind of thing, because the stock like the trajectory was not like an inverted V, right? It didn't go up and then down, so you don't get a clear signal that the momentum has stopped and you should get out. The momentum score will kind of flatten or will taper slowly towards the downside. So that is why the exit might also be slow. Your exit will be like it will be delayed, right? The exit of that stock from the portfolio will be delayed. So during many points in this journey you will feel like differently, right? In the first, like here when you bought it, and then immediately like in the 2 weeks after it you are sitting like at like a 15% loss, you already feel like a loser. Okay, and then you recover all those losses back and you create a new high, you feel like a winner again, and then again it starts crashing like hell, and you again back into the loser territory and you ultimately exit the stock. So it is a like a journey of emotions as the stock goes through it. But the main point is that when such kind of false breakouts and false bounces happen, they kind of the decay of the momentum signal is elongated, and your like the stock stays on in your portfolio for longer without doing anything. But there is no way to know this in advance, right? The stock could have, like before this rebalancing, so the stock exited here in this rebalancing, the stock could have just started going higher again, right? Who knows, right? So we can only tell this in the hindsight. That is why like sometimes it works for us, sometimes it doesn't work for us. Okay, last loser, so this is the fourth biggest loser of our stock in 2024. This is HPCL, and most of the learnings have been covered in the past stocks. This is a similar thing. So this stock is different in the way that we had actually gotten into the stock quite a while back, right? So we got in the mid of Feb and we exited in the mid of March. I think there was some, if I remember correctly, there was some issue with the government taxing these oil marketing companies during that time. So BPCL, HPCL, all of them had fallen quite a bit. But look at the trajectory before where we entered. Always when you enter a stock, it will look very, very promising because the past trend has been so promising. So we went here, we kind of caught the local top here, crashed quite a bit, exited here. The stock actually recovered, although that's a huge red candle here. But this is the 4th June candle. This is the election results candle. But anyway, the stock kind of started recovering, and for the past 4.5 months, 5 months, it is kind of consolidating in a region. But this tells you that mean reversion does happen. It's not always that whenever you get an exit signal, you will be proven right. Right? Not all stocks have the trajectory like Cochin Shipyard, right? So you get out at some point, and the stocks keep going down, 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 and you feel happy. Okay, thank God I got out. So in some cases, mean reversion will work, as we talked before. So you will get out somewhere, and then the stock will rebound from there. It has happened with Motilal Oswal for us. It has happened with the Bombay Stock Exchange for us. So a lot of stocks, this happens that you get out after some fall, and the stock rebounds, and you are like scratching your head as to what happened. If only I had not taken that exit signal. If only I had just been in the stock, right? I would still be sitting on the gains. But in the other scenarios, you do not want it to work like that. So mean reversion works, and the rebounds and the bounce backs works in very, very tricky ways. So we do not have a way of have a way of predicting it beforehand. So we just, as fools, right? I'm the biggest fool here on this channel. So as fools, we just stick to whatever the system says, whatever strategy says, and we just place our exit and entry decisions accordingly. So yeah, that's pretty much it for today. We'll do the rebalancing video on Wednesday. But yeah, if you like the content, then consider subscribing to this channel. And whatever stocks we just described, all of that you can find on the link that is in all our video descriptions. So you can see when we bought them, when we exited them, all those things. But again remember, all of these are for general discussions only, right? These are general observations. Do not try to apply it with any of the specific stock names that we have discussed for illustration in this video. So that's it for me today. Thank you for watching the video, and see you in the next video. Take care. Bye bye.